Good day, you're watching Businessworld Live. I'm Jes Delos Santos and here are today's top stories. The government remains confident of achieving its growth target for 2022 even as the economy grew at a slower pace in the second quarter. The country's debt to GDP ratio eases, but the figure still exceeds the threshold considered manageable for developing economies. Bad loans fall for a fourth straight month in June, bringing the non-performing loan ratio to its lowest level in 21 months. And 2 more digital banks have started commercial operations. We begin our broadcast with the economy growing at a slower pace in the second quarter as rising commodity prices weighed on consumer spending. Despite the slowdown, NEDA remains hopeful that full-year growth targets can still be achieved. Shaila Francisco with the details.
The Philippines' economic recovery has sustained its growth momentum, albeit at a slower pace. In the second quarter of the year, gross domestic product stood at 7.4%. So far, the country is the second best performing nation in Southeast Asia. The NEDA and some economists believe that the growth could have been faster if not for high inflation.
Look at the consumption side. That's 70% of the economy. So if the purchasing power of consumers is improved by the reduction in prices, then obviously that will boost. But exactly how much, we don't know. But it will obviously be a positive thing.
Taking a closer look, the agriculture sector remained weak amid rising input costs. Quarter on quarter, household consumption, transportation, and manufacturing slightly declined. The inflationary pressures brought by the Russia-Ukraine tensions were factored in and are expected to continue affecting the country's economic growth in the succeeding quarters.
To the extent that this is expected to continue in the second half, you would likely to face some challenges indeed in sustaining that growth. So we may not grow as fast in the second half as in the first half.
But the NEDA is confident that the 6.5 to 7.5% target growth this year can still be achieved. NEDA said it is already providing subsidies and other assistance to the marginalized sectors. Shaila Francisco, VR1 News.
Meanwhile, data from the Bureau of Treasury show that the debt to GDP ratio eased in the second quarter. As of end June, the outstanding debt is at 62.1% of the overall economy. That's lower than the 63.5% debt to GDP ratio recorded in the first quarter. However, this still exceeds the 60% threshold considered manageable by multilateral lenders for developing economies. The second quarter 62.1% ratio was also higher than the 60.4% at the end of last year and the 39.6% at the end of 2019 or before the pandemic. The Treasury says the debt rose to a record 12.7 trillion pesos due to issuances of domestic and external loans as well as currency adjustments. Loads of data to digest, primary of which was that slower growth posted in the second quarter. Let's pick the brains of Nicky Mapa on that one. He is a senior economist of ING Bank Manila. Good day, Nicky.
Good morning. Thanks for having me.
All right, again, we lost steam in the second quarter. What brought about that slowdown?
Yeah, I think at the top half of the segment, you did have Secretary Balisacan talking about how inflation was the likely culprit. 70% of this economy is household consumption, and when you have inflation accelerating at this pace, I think for the quarter it was at 5.4%, definitely taking some wind out of the sails of consumption. The main, contributor to the slowdown was basic food, and with inflation above target and now at 6.4%, we can only expect this to pull back further.
Given that, is the worst over here for inflation, or is the road just about to get more bumpy? How do you think inflation will play out for the rest of the year?
Yeah, well, we think that inflation is just starting to heat up. We had, discussed previously that the first half of the year we saw inflation pick up largely due to first round effects. This is because oil is more expensive. Imported items are more expensive. Now we're starting to see in the second half of this year, the second round effects really kick in. This is when the wage hikes begin to take effect. This is when the transport fare adjustments begin to take effect. And this is when all the firms that have, largely kept prices unchanged. This is when they finally decide it's time to tack on more on sticker price, because it doesn't look like inflation is going to be slowing down in the near term. We have inflation peaking in October at 6.8%.
6.8% by October, but do you also see emerging demand side pressure here?
Oh, definitely. A lot of this is demand side pressure. I mean, even if our growth slowed to 7.4%, it's still nothing to sneeze at. Higher wages are just going to push inflation higher. And, despite the slowdown, it's still quite a robust and healthy, good-looking number.
Okay, given all those things to be considered, should we be bracing for more pain ahead in the second half? How does this all play in for full-year growth targets?
Yeah, unfortunately, we're running smack into the triple threat that we discussed previously. The three-headed monster of higher inflation, rising interest rates, and the relatively high debt-to-GDP ratio. These are the three sort of direct counterbalances to the major sectors of the economy. Add to that the trade numbers that came out yesterday sort of portend or point to another significant drag on the economy. One other thing I wanted to point out that the growth numbers showed yesterday is that the net exports continue to be a substantial drag on the economy, largely because our import numbers are surging at the time that our export numbers are just managing to eke out modest gains.
Okay, let's touch on more on those trade data later. But for now, again, you have the government targeting 6.5 to 7.5%. How likely is that to happen, and what would it take to reach the ceiling of the target band?
Yeah, well, I think that for one thing that we have to come to terms that we might have to accept the lower end of the official government targets, something closer to 6.5%. But with the way that inflation is really kicking higher and with interest rates just about to rise, BSP rather aggressive in its rate hike cycle. This is definitely going to stunt some of that nascent capital formation that we just saw picking up. That's 6.5%. We have it at 6.3, 6.2% now. One way that we can get this number up is if inflation definitely falls down, decelerates rather quickly. This will be a good boost to consumption. But from where we sit right now, it's going to be a tall order.
Now, how will all this factor in the BSP's next policy meeting? Should the BSP still be as hawkish and raise rates by 50 basis points as they have signaled earlier? And do you see them maintaining that stance for the rest of the year?
Yeah, I think BSP has to maintain its hawkish sort of rhetoric, carry out that 50 basis point in August just to stay ahead of the curve. They did the emergency rate hike. Largely unexpected, mainly because they'd fallen so far behind the curve. So they have to stay ahead of it. And I do have them at 4.5% by year end. They can't afford to have that differential with the Fed funds target collapse anytime soon. If they want to sort of stick to their inflation targeting mandate.
Okay, now earlier Nicky already touched.
I mean, growth is fine.
Go ahead.
Yeah, well, growth is fine. So it's okay to be hiking when the economy is growing. It's never a good idea to hike during a recession.
All right. Now, earlier you touched on a trade deficit here, again, widening to a record high in June. What's bringing this about, and are we seeing this easing, or will this be prolonged? And how should this at least weigh on growth in the peso?
Yeah, so two things moving in the trade numbers. You have your exports just managing to eke out gains, and the main reason for this is that your mainstay electronics subcomponent, which is about 45% of the entire export portfolio, is starting to see some strain from this global slowdown. China also slowing down, so electronics demand for our electronics has really slowed, and it looks like it's going to continue for the rest of the year. Those poor electronic numbers sort of manifested in our manufacturing numbers in the GDP figure. So that all sort of tied together. On the flip side, you have imports really picking up the pace. Half of this is because energy imports are bloated at the moment because of the higher dollar values. But at the same time, we're also importing food items. We're also importing capital machinery, raw materials as the economy reopens. So we're looking at a substantial widening of the trade deficit, and that's going to be, I guess, a net negative on net exports for GDP in the coming months.
All right. Now, again, earlier we reported about debt to GDP ratio declining to 62.1%. Is this the start of a trend? Will we see levels go down to government target of at least 61.8% by year end, or is it too early to cheer, especially after the slower growth in the second quarter?
Yeah, well, it's a good sign that they brought down that ratio, but I think they're going to have to continuously bring that down further and aggressively. I think the contention that one of the major ratings agency has with the Philippines is that we're not bringing down that debt to GDP ratio fast enough. This was like I think this was their prognosis at the March review when they said that their concern is we're not bringing down this number fast enough. So it's a good sign, but with growth slowing down, it's going to be hard to really offset the debt numbers. So I think if the government can do two things, they can tighten up the belts, constrict some of the spending to limit the impact on their debt numbers, or they're going to have to find a way to find fresh taxes to offset the projected expenditures.
Okay, some further consolidation may be needed, but how is that going to limit the government's ability to at least grant fiscal stimulus? Is this putting more pressure on them to actually slap new taxes?
Yeah, this is the third sort of installment of the triple threat that we're talking about. It's the fiscal handicap that they have. So it's either you spend a lot and then you have the impact on your debt numbers, or you sort of cut back on spending so that you don't have your debt numbers bloating. I think this is going to be it's like the government will have to walk the tightrope here, ensuring a delicate balance of spending to keep the economy going because the GDP numbers are stalling a bit, but at the same time not sort of breaking the bank with regard to expenditures. Because anytime you bloat those debt numbers and you stay above 60%, you're very susceptible to ratings action by at least one of the major ratings agencies, and you could have a downgrade before the end of the year.
Okay, definitely some delicate balancing act needed there. Thank you very much for your insights. Again, Nicky Mapa, Senior Economist over at ING Bank in Manila.
Take care.
Now let's pause for a quick break, but coming right up after that. Bank's non-performing ratio declines to a 21-month low in June. More of that and other stories when Businessworld Live returns. Stay with us. And you're still watching Business World Live here on One News. I'm Jes Delos Santos. Soured loans held by Philippine banks fell for a fourth straight month in June. This brings the non-performing loan ratio to 3.6%, the lowest in 21 months on the back of rising economic activity. Bad loans dropped by 12.7% to 421 billion pesos in June. That's from 482 billion pesos last year. However, economists say the decline in bad loans might slow in the coming months amid the BSP's monetary tightening. The Bangko Sentral is proposing guidelines for addressing consumer complaints. According to the draft rules, a financial consumer protection assistance mechanism will be the first level recourse for consumers who are not satisfied with a financial product or service. If a consumer is dissatisfied with the handling, they may escalate their concerns to the BSP. Stakeholders have until August 22nd to give their feedback on the proposed rules. These guidelines are in accordance with RA 11765, or the Financial Products and Services Consumer Protection Act, or FCPA. This law strengthens the rights of consumers to equitable, fair, and timely handling of complaints. From the Philippine Star, the BSP reports that 2 more digital banks have started commercial operations last month. These are Uno Bank Incorporated and the Boitis-led Union Digital Bank Incorporated. The Central Bank's Financial Supervision Center says the firm's operations boost their efforts to convert the country from a cash-heavy to a cash-light economy. Aside from these 2 corporations, the BSP has also earlier granted digital bank licenses to GoTime, Maya Bank, Overseas Filipino Bank, and Tonic Bank. Now, Globe Telecom has requested the National Telecommunications Commission, or NTC, to compel Dito Telecommunity to pay a 622 million peso fine for allegedly violating their interconnection agreement. Globe made the announcement after Dito filed competition complaints versus Globe and Smart. The Ayala-led company explained the penalties were brought about by fraudulent calls placed through Dito's network to Globe. Globe also wants the NTC to authorize its temporary disconnection of interconnection until Dito deals with the issue and pays compensation. In response, Dito's Chief Administrative Officer Adel Tamano says Globe's position is a violation of the Philippine Competition Act. Tamano explained this is an admission that they are making interconnection subject to the acceptance of this obligation. He added that Dito is also a victim of these fraudulent calls made by third parties and has taken steps to deal with the matter. Meanwhile, Smart Communications VP for Regulatory Affairs Roy Ibay said Dito is attempting to avoid liability for the fraudulent calls by filing, quote, a baseless complaint with the PCC. Although Ibay said that Smart is willing to grant Dito's request for more capacity, provided that Dito signs an agreement to compensate Smart if fraudulent calls continue to proliferate. In response to Smart, Tamano denies that there is forum shopping in their PCC complaints because they have 2 very different causes of action compared to their NTC petition. Tamano said that Dito's PCC cases are filed to fulfill the Commission's mandate to provide true competition in the industry. Now, researchers in Italy are developing a humanoid robot that can read and react to human emotions. They hope the robot can help people with autism and Alzheimer's. More of that story courtesy of Bloomberg Quick Take.
Quando ci troviamo di fronte a questo tipo di macchine si sente spesso parlare di empatia, forse sarebbe più corretto parlare di intelligenza emotiva, quindi una proprietà che noi consideriamo peculiare dell'essere umano, ovvero la capacità di capire come si sta sentendo la persona che abbiamo di fronte. Ecco, con Abel vogliamo investigare proprio questa cosa, ovvero vogliamo capire se una macchina può riuscire a portarci anche in uno stato, a mantenere uno stato di salute, oltre che fisica, anche mentale, emotiva. Questa è una cosa particolarmente importante in alcuni ambiti. Pensiamo ad esempio allo spettro dell'autismo, ai disturbi del comportamento, al disturbo sociale, ma anche a quelle condizioni in cui si ha una degenerazione neurocognitiva di un soggetto, quindi ad esempio la demenza senile o in particolare l'Alzheimer.
And those are the biggest stories in the economic and corporate front today. I'm Jes Delos Santos. We are One News, all sides, all the time. Don't go away. We'll give you the latest on the local bourse when Business World Live returns. Stay with us. And they're still watching Business World Live here on One News. Now, shares rose Tuesday despite that slower growth in the second quarter. Let's see if that still holds for today. However, you can see here the main index reversing track here, starting the day in the red, down 0.4% to 6,445. We are in fact joining the rest of Asia here, starting the trading day this midweek with a bloodshed here. Japanese stocks down. The topics in the Nikkei both in the red. The same also can be said for Korean stocks here. The Kospi down 0.7%, as well as Australia Starting the day quite flattish here, albeit on the downside. Also, we have Chinese stocks, the likes of Hang Seng, also starting the day in the negative territory. This comes ahead of U.S. inflation data, which might affect expectation of further Fed rate hikes. Forecasts show cooler U.S. inflation for July, but still at elevated levels. Now, let's check in on our leaders and laggards here on the domestic front here. You'd see San Miguel, our best performer so far in the day, up by 2.7%. This is the conglomerate. Plans to build 12 poultry plants for $1.2 billion. Also, you have other performers here like Mega World in the green, up 2.25%. On the flip side, however, Robinson's Land, the day's worst performer so far, down by 2.9%. Domestically, though, there's one sector we have to be keeping an eye on. I'm talking about the financial space. That's after non-performing loans ratio fell to a 21-month low in June. Looking at our lenders, however, let me just refresh this very quickly. You'd see here only three banks here starting the day in the green. You have Metro Bank up by 0.9%, Security Bank and East West minimal gains here, up just over 0.1%. BPI on the other hand here losing as much or shedding as much as 0.9% so far in the trading day. Now from banks, off we go to telcos here as the saga continues. This time you have Globe asking the National Telecommunications Commission to require DITO to pay 622 million pesos in interconnection penalties. This over what Globe claims to be fraudulent calls via DITO's network. Globe also wants to trunkline disconnection with DITO. This comes after again DITO filed complaints before competition authorities versus Globe and Smart over alleged anti-competition practices. As you can see right here, DITO so far after losing some points earlier in the trading day, now looking flat at 3 pesos and 76 centavos a piece. However, you have PLDT and Globe still managing to eke out some gains here. PLDT is up by 0.5%. Likewise for Globe, surging by as much as 0.9%. Converge on the other hand, shedding a 0.25% here at the start of Thursday's trade. Lastly, Wednesday's trade rather. Lastly, let's have a quick check on the peso. That's after Nicky Mapa of ING Manila said the widening trade deficit could actually impact growth and the peso as well. Looking at the peso, indeed some weakening at least at the start of the day here. We are now at 55.795 to the greenback. And that's it for today, August 10, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jes Delos Santos. Mask on, wash hands, and stay safe. Philippines, we are One News, all sides, all the time.